ARM Holdings, a company that provides chip technology used by big tech giants like Apple, Microsoft, Amazon, and even my favorite AI stock king, Nvidia, just reported earnings. And luckily for investors, the stock is up nearly 50% in one day. What is going on? Is this the AI bubble? I want to talk a little bit about that in today's episode. First, I want to start off with the top level overview on the results, then take a closer look at the company, and finally look at valuations and my overall thoughts. Welcome. For those not familiar, my name's Jose Najarro, and I spent way too much time reading about semiconductors and AI. But thanks to that, my education and my work experience at various innovative companies, I believe I have created the number one semiconductor podcast for investors. So let's get started with today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so we can see ARM right now, ticker ARM, just reported earnings and sitting at $114. The stock is up roughly 49%. Year to date, the stock is up 66%. And in the past year, the stock is up roughly 80.4%. So if we take a closer look at what's happening, the company reported earnings. They did beat on earnings per share. Analysts were expecting roughly 25 cents. They reported 29 cents. In revenue, analysts were expecting roughly 761 million. The company reported 824 million. And then for the upcoming quarter, they also did beat analyst expectations on both earnings and revenue. In revenue, analysts were expecting somewhere around 780 million. The company said, hey, look, we're actually going to do somewhere between 850 to 900 million. So almost $100 million extra at midpoint. So this is what really has investors excited. The other thing is ARM technology is used by a lot of big players in the AI space, and during their kind of presentation, they obviously took advantage of the AI craze. Later on in this episode, I do want to take a closer look at valuations because the stock is sitting at $114, and PE ratio for the next 12 months is still at 83. And if we take a closer look at the next 24 months, it still seems a little bit crazy. But first, let's just kind of understand a little bit more about ARM, and then maybe you guys can tell me, am I overthinking this? Is this still a buying opportunity? Obviously, I'll share my thoughts, but I love to hear from you guys as well, as I do believe this community is great for discussing a lot of different investment theses for the semiconductor space. So for those that don't know ARM, ARM designs chip technology that other companies can license and pay a royalty on the chips sold. So these chips can either be very highly customizable, where the customer pays more on royalty than licensing, or these chips can already be extremely pre-made, obviously still customizable, but since ARM does a nice of the front end of the work, they can collect both royalties and get paid a higher licensing fee as well. The chips hit various markets. Normally, we kind of know ARM for their CPUs for the mobile industry. One of their big customers is Apple. Apple designs their own chips, but they are ARM-based chips, so Apple plays a nice licensing and royalty fee to ARM. The other big player here is Qualcomm, but now ARM is also expanding into other industries like cloud computing, automotive, and CPUs for the cloud computing. Big names use them. Amazon has their own CPU called the Graviton. The Graviton is an ARM chip. Microsoft recently announced the Cobalt 100. That's also an ARM chip. And Nvidia, they have their Gray CPU, which is also an ARM chip. Inside the automotive industry, we have a lot of big players as well. Nvidia is one of my favorite companies, and their automotive chips are mostly ARM-based chips as well. So we can see that, hey, they're not just a mobile company, they also provide chips for different technology leaders, like I mentioned, Nvidia and Amazon, and they're hitting various industries. Now, they do have, in the royalty businesses, they have two main memberships. There's the ARM Total Access, which is the top of the top membership, where you pay a membership fee plus a royalty fee. Then they have the ARM Flexible Access, where you have a lower membership fee, but you pay more per product license license plus a royalty extension. So maybe if you're using a lot of ARM solutions for various industries and various products, you're most likely going to get the ARM Total Access. If you're only using a little bit, it might make more sense for you to do the flexible access. And we're going to take a closer look at the numbers there. But that's a nice top level overview of who the company is. And I hope you learn a little bit just in these first few minutes. I want to take a closer look at their earnings, but first, I do want to say thank you guys for the support. I can't believe it. We just hit 33,000 subs. Can we hit 34 by the end of the week? That would be amazing, but I'm here pushing my luck. Obviously, I do enjoy talking about the semiconductor space, so thank you guys for being here and kind of enjoying my videos. I'm getting a lot of great reviews. Also, if you want to support the channel a little bit more, check out my special offer at fool.com/Jose. Now, let's take a closer look at the revenue overview. And like I mentioned, then we're going to take a closer look at valuations. And again, I'm going to be showing where I'm seeing this thought process, but obviously I want to hear from you. So in forms of revenue, we can see 824 million. Total revenue was up 14%. Their licensing revenue was 354 million, up 18%. Most of their revenue comes from royalty, which was up 11% year over year. Now, one of the great things for royalties that they're seeing is they have seen a significant transition from V8 products to V9 products. And like I mentioned, ARM designs their own chips and they design new versions, and the new versions are up to date with new technology, right? So the current version that they have right now is the V9. So a lot of customers are transitioning from the V8 to the V9. The great thing about the V9 is they mentioned that this roughly has 2 times the royalty rate of the equivalent V8 product. The main reason is there's more technology, more chips being used, so obviously they have a higher royalty fee. And in V9, obviously with this big push of AI, you are seeing the amount of chips being deployed increases, where now it's not just a CPU, right? You have a CPU, you have an NPU, you have a GPU to some extent, all in one chip. So you're using more technologies from ARM, and this is overall increasing their royalty rate. They did mention during the earnings call that as a baseline is 2x the royalty rate versus their V8 products. But in certain instances, like when you're looking at high performance computing, those royalty rates are actually a lot higher. And maybe this is what has investors excited, as we are seeing more companies develop their own AI chip in high performance computing. So obviously that can be a huge boost for this company's royalty rate. Now, ARM is still very dependent to the mobile business. They do mention that 35% of their royalty revenue comes from smartphones. And obviously with this recovery in the mobile business, that is helping the company grow in forms of royalty revenue. But they do mention that the other 65% are coming from other industries. And there's more revenue growth potential in those, as obviously, like we mentioned, more chips, but also different segments which have different royalty and licensing rates. And like a perfect example, we did see that the Grace Hopper, the Graviton, and Microsoft Cobalt are all using the V9 based designs, which tend to have the higher revenue rates. And again, maybe investors are forward looking that when we do come to V10, that royalty rate is going to continue as we continue to see more chips needed per each design that we're seeing, right? The other thing that this company has done really well is what they call their compute subsystems. And this is pretty much a complete finished block of designs that they put together for their end customers that save them significant time around validation, engineering work, and also around time to market relative to cycling products to the fab. So one of the first designs that actually went public was Microsoft's Cobalt, which uses their Neoverse cores of 128 CPUs. So we can see if Microsoft believes that their kind of finished block designs are great for them, and Microsoft is definitely an important player here in the high performance computing market, then that obviously bodes well for their overall technology and future potential of maybe other players using their compute subsystem which has those finished block designs. Now, I did mention a little bit earlier on about their 2 types of licensing deals, their ARM Total Access and their ARM Flexible Access. In their ARM Total Access, this quarter they added 5 new customers. And you might be, Jose, only 5. Remember, not too many players are designing chips, so these are probably very, very big deals. And now that jumps up to 27. So that was actually a nice growth over just one quarter for their total licensing. In forms of their ARM Flexible, they did increase 6 new customers there and up to 218. Here they had 50 plus renewals and 14 new agreements signed with companies in various applications from AI accelerators, edge servers, automotive applications, and sensors. So I think now we do have a great understanding of ARM and all the different products and the different ways this company makes money, the different growth opportunities. Now I really wanted to take a closer look at this company's PE ratio. So PE ratio forward is the end of this fiscal year, and they end this fiscal year in about 3 months. The PE ratio there is about 107. I personally believe that, hey, maybe this quarter is okay for it to be too high, still very high for most investors, in my opinion. Now, if we take a closer look at PE ratio forward 1 year, which is within the next 12 months, give or take, it's actually 5 quarters from now, it's roughly 82. In my opinion, that's still pretty high. Now, for the next 24 months, we don't have a PE ratio estimate, but we do have earnings per share estimates, and that's roughly $1.81. So that's about 24 months from now. And that, with the current price right now, will give a PE ratio of 60. Now, ARM, right now, in my opinion, with the PE ratio of 60 for the next 24 months, definitely seems pretty pricey. So let me know in the comments below, what are your thoughts? If I was to really look at ARM based on these new estimates that I personally would enjoy buying ARM at maybe 60 and below. I've done videos in the past where I kind of talk where ARM is not one I'm too excited about, but again, I'm just kind of sharing my overall thoughts. If there was ever a time evaluation where I would kind of be comfortable, would be at a 24-month PE ratio of roughly 30 or somewhere around there, and that would be a stock price of roughly $60 and below. Obviously, that's a huge downturn from right now. So I don't know if we'll ever see that, but those are just my overall thoughts. And I'm not here going to FOMO into ARM. I definitely do believe right now this is getting very excited. One more thing to note before I close out the episode, and it's something that I do believe a lot of investors are worried right now, is the current owner of ARM is SoftBank. SoftBank owns roughly 90% of the company. So only 10% of the company's shares are in the public market to some extent. The other 90% is held by SoftBank. And some investors are worried, hey, what happens when SoftBank says, hey, look, this stock is getting pretty overvalued. Let me start selling a lot of my shares. And you start to see more shares in the public market, which can definitely drive stock prices down. I'm not saying that's going to drive a huge stock decline, but it's always a possibility, and it is something that I do believe investors should know, at least for now. So I hope you guys enjoyed today's episode. Let me know, what are your thoughts on ARM? Are you bullish? Are you bearish? Do you think the AI bubble is real, at least for ARM? In my opinion, I say yes, but I could be completely wrong. So take care, have a good day, and see you next time.